In 2017, we had some data out showing that there was a drop of about 70% of homes built by SME property developers, and the Federation of Master Builders has said that for about 40 years ago, SME property developers were building 40% of the new homes in the UK. Now it's a mere 12%. What are your thoughts? Why do you think? Because you're very much focused on the SME property sector. That's your sweet spot. You're not going for the larger national home builders and what have you. That's where your sweet spot is. Why do you see, what are the trends that you're seeing? Why has that happened? What has it led to that kind of drop? And what can we do to address it?
So to clarify the data there, because we look at a lot of this data. So so you're right. Historically, 40% of housing supply has been produced by SME lenders. Developers. In 2008, 30% of supply, which, by the way, supply is remarkably consistently 200,000, not the 300,000 we actually need, of course. But in 2008, 30% was built by SMEs. And in 2017, 10% was built by SMEs, and that's a huge reduction. And that's the pain we felt in the market. So you can look at that two ways, right? It's either a structurally failing segment of the market, therefore why on earth would we play in it? Or there are major barriers that we know how to unlock best. And obviously the view is the latter. And we do a lot of research, and if you ask developers, broadly similar questions, but I'll talk about the future-looking one. What will help you build more homes? Okay, you ask SME developers that, right? Reason number 4, okay, is better taxation policy. Reason number 3 is better planning policy. Well, great. Reasons 3 and 4 are both being addressed by the government right now, and were levers they were pulling mid last year. Right. Number 2 is an improving economy. Well, that's a collective effort of the UK, potentially stimulated by government incentive. But number 1 is better sources of funding. Right. So it goes right back full circle to the fundamental pain that we felt. Okay. We knew with a better funding source, we could build more homes, grow our businesses quicker, spend more in the economy, and we knew there are others like us. Okay, and the reason why that's a fundamental problem is because if you go forward and you say, right, 90% of house building forevermore, it will be large builders, right? Well, that's a fundamental problem because large builders need scale and large sites to be able to build economically, whereas the sort of the entrepreneurial SME sets that we fund will be looking at small parcels of land, infill sites, conversions, HMOs, air rights, modular, whatever on a small scale, anything between 1 unit and say 30 units. Okay, and that, as Robert Jedrick has been talking about very recently, is critically important to housing supply and spend in the economy moving forward. And that is the fundamental behind Boris's build. And that is what we're unlocking. This is not sort of, Andrew and Mike were a bit annoyed they couldn't get funding on their projects very easily in 2013. No, this is that point multiplied across the UK of every single SME developer out there. And that's why we've developed the business to fund exactly that, to be the better source of funding. And fundamentally, if you think that, to depersonalize the point that we felt, very roughly on our research again, so piecing together anecdotal, an SME developer will spend about a third of their time looking for sites, about a third of their time executing, delivering sites, and about a third of their time faffing around with finance, right? So if we can compress that third of the time financing, okay, to a 6th, a 12th, an 18th, a 24th of their time, they're able to find more sites and execute more sites. We build more homes, and there's more spend in the economy, and they individually are benefiting from growing their property business quicker. So the impact is profoundly important on a macro level. And we funded 1,200 homes already, which is just the start. It's a fraction of where we're heading. And that is because we are delivering the product exactly how SME developers actually want the product: quicker, easier, more transparent, more expertise-led, and certainty of funding for their property projects.
So do you think that part the reason why there's been a major reduction in the number of SME property developers, and therefore the flow of homes coming to market is because of all these issues we've had with funding starting, not exactly starting in 08 or 09, but it was symptomatic from that period, that the way that the funding is being accessed, and then once they're accessed, the behavior of the lenders has also then caused the reduction in number of SME developers as well, because a lot of SME developers did go to the wall in that period, in 2010, 2011, and until the likes of CrowdProperty came along, there wasn't any other forms of funding to encourage the growth of the SME property developer sector. Would you agree with that?
Exactly that. It's, our research shows it. Our research is over a sample set of over 500 SME developers. And we're saying what's holding you back and what will enable you to build more homes. 42% of people say that funding is holding them back. 41% say the biggest enabler for them to build more homes is better sources of funding. Both by far the most meaningful measure or factor. So this is right at the heart of solving this issue for SME developers. And that's what we're entirely focused on, serving brilliantly, again, to enable the entrepreneurial set, SME developers, to build more, to grow their businesses quicker, and spend in the economy.
Okay, so you guys went with you focused on debt, peer-to-peer lending, and didn't go down the sort of equity route. But what is your view, because on equity play, and particularly what I'm getting at is, what's your position in terms of a SME property developer borrower coming to you raising debt finance, but who's also potentially looking at either JV funds for equity or peer-to-peer equity finance? Partly my question is, why didn't you consider going down the equity route, and partly what's your view on somebody who's because that would really open up. There's deals out there that SME property developers can access, but the lack of debt finance is one hindrance. The other is lack of equity finance. So if you're a bit more comfortable, for example, opening up to allowing borrower developers to have equity crowdfunded, then it really does open up the funding side for developers.
So we fundamentally, the equity position in the capital stack is very, very high risk and very volatile. So that's one factor. The other factor is a critical element in borrower motivation is skin in the game. Okay, so how much equity they have invested in that project. We do accept people with investors, because we know property, we know that's the case. We will have very clear intercreditor agreements and wider agreements to very clearly stipulate all of the hierarchy of waterfall of the paybacks. Okay, but there aren't equity platforms of any scale. More than a couple of million, and that is a very volatile position to be in. They're unproven in terms of the returns that have been delivered, and therefore reputationally that's an issue. It's a very different prospect to have for a developer to have a closed set of a few investors that are clearly high net worth and sophisticated investors that are signed up under SCA requirements that are probably consistent investors of theirs, having backed them over a number of projects. But putting it on an equity platform is a whole different can of worms, and we would look at every case on a case-by-case basis. But you know, it's not a in our view, it's not necessarily being treated with the rigor that it should be. You know, again, this comes down to resourcing of a business, right? We've funded 120 million. We've got a resource base of 41 here. You know, small platforms have next to no resource, and quite often they're outsourcing their due diligence as well, all of which is deeply concerning. So we are very cautious about those kind of reputational crossovers.
Okay, and I wanted to ask about the FCA authorization. You guys are directly authorized by the FCA, which is something that you did in 2014. A lot of other peer-to-peer platforms, either debt or equity, are appointed representatives, so they piggyback on somebody else's FCA authorization. And I know, in fact, you know, hopefully I'll be having somebody on the show soon to talk me through incubators. So, you know, financial regulatory incubators who essentially a bit like, you know, private equity incubators, you know, they're really just to help you along in terms of FCA compliance and what have you. What made you guys go for direct FCA authorization, which, you know, my understanding is it's a lot more grief, a lot more hassle, a lot more headache, and on an ongoing basis, right at the beginning, but also on an ongoing basis. Why did you go for that approach rather than being an appointed representative?
I mean, very simple, doing it properly, right? We want to work directly with our regulator, and we work with them closely, and it's great. We've got a very, very good relationship because, as Andrew said, the last time they came here for a full-day visit, they, you know, it either is going very badly or very well if they say, right, I've seen enough, I'm going home. And it was obviously the going very well piece for us. So, you know, that's fundamentally important. You know, I don't understand why someone would sit outside of, you know, direct regulation, or in some cases, not even have any relationship, indirect or direct, with the SCA. So, look again. Look at the largest players in peer-to-peer lending sector. So we sit. We're founder members of Innovate Finance 36H Group, and we are one of 5 platforms. So us, Funding Circle, Zopa, RateSetter, and LendingWorks. Okay. And a 36H group requirement is direct SCA authorization. Now, I mean, if that's not the right way to do it, why would that requirement be in place? You know, it is very, very important that platforms have a direct relationship with the FCA.
And is it because of that direct relationship that you have with the FCA that has enabled you to have these other, you know, products for you know, through lending through your SaaS, lending through your SIP, and the ISA lending? Is that because you're directly FCA regulated? I mean, if you're not, can you still have those kind of products?
Theoretically, yes, you can, but obviously, you know, those products have taken resource investment from our business, which comes from building a good business, part of which is the trusted brand associated with direct FCA regulation. And you know, it's all a collective entity to say, right, who in this sector is building the right platform in-house, not sitting on someone else's, who's going directly authorized and regulated with the FCA or not. And there are X number of other factors. You know, for example, data transparency. If you look at, you know, can you find out very, very easily and very, very quickly the stats behind a platform, because that drives, the expertise, the experience, the lending track record, all of that, and understanding that. And you can see, crowdproperty.com/statistics. It's an award-winning statistics page that is very, very transparent. And that's the first page you should ever look at in terms of a platform, because then if you can't see the data that you're trying to compare with other platforms, then that's a red flag. The whole opportunity of this sector, and why we work with some of the multi-billion pound funded platforms, is bringing transparency to a market. Peer-to-peer lending has the opportunity to match the supply and the demand of capital incredibly efficiently, but it needs to do that effectively, and it needs to inform people who are participants because their capital is at risk. And that is why that data transparency piece is crucially important. So there's another element that you really need to understand of any platform that you're looking at, is what are those numbers? Because have these guys delivered a track record? Have they been lending for years? Et cetera, et cetera. As Andrew said, after 35 years in the industry, still learning. So if people don't have that expertise in the team, then they're a long way behind that learning curve, and therefore the asset class expertise is so fundamentally important.
Something that's very close to my heart on this is the legal process. I've written about the friction that I frequently encounter when acting for a borrower, borrowing term finance or bridge or development finance from a traditional lender. I recently acted for my first borrower client who raised funds through CrowdProperty. And the legal process, I have to say, was genuinely a breath of fresh air. So it went very, very smoothly. So I'm keen to find out, how did you guys, because Mike, you and I have exchanged messages in brief about this, but I think you engineered the legal process. You were very heavily involved in the legal process rather than just leaving it to the lawyers. Talk me through what you guys did and what was the objective you were trying to achieve.
So just before Andrew gets into the detail on this, sorry, my background is a strategy advisor, management consultant, and so I couldn't resist, myself and a number of the team getting all over this, because what we wanted to do was take time and friction, as you mentioned, out of every single element of the process, both internally but also externally. And it was, massively masterminded also by Andrew as well. I don't know if you want to say.
So we, day one, we employed a decent firm of banking lawyers to put together a suite of documents. And interestingly, the first draft was so uncommercial that we had to just take, we weren't taking a view on things. We were basically saying there is no way anybody will sign up to this if that clause is in that agreement. So we set about finessing those documents, from which we then put together a panel of property lawyers. Okay, those property lawyers all have banking departments, so we refresh our documents regularly to catch up with any case law that might have occurred in the intervening period. But the suite of documents go for everything, obviously, from your usual documents you'd expect to see on a first charge secured lending basis, right through to an intercreditor agreement, right through to ensuring that if there is if there's a project where you might be dealing with the borrower, might be dealing with the developer, but actually he doesn't own the land. So making sure the joint venture agreement was as bomb-proof as possible. Shareholders agreements, we obviously look at those, checking the structure of the company and making sure it was UK based, etc. And all the property lawyer then has to do is add the variations to the deal, to the templated version of our suite of documents. And sometimes they make a mistake because they've put in the wrong variable, but we pick that up, as does the borrower. But generally speaking, the finance documents are pretty straightforward, easy to follow. They're not full of too much legal linguistics, which people wouldn't understand if they read it anyway. Even the definitions that we created, I spent quite a lot of time so that, if you're in the frame, in the main part of the agreement, and you don't understand what that means, you can refer back to page 1 or 2 to pick up the fact that actually it means this. And there's quite a lot of drafting of documents that I've seen over many years where the drafting has been very poor because there's been no definition of a fundamental phrase in that clause. And I was very clear from the outset that we didn't want to leave any misinterpretation on the documents. So we did spend a lot of time working through that, but it's important because what we do find is that borrowers don't tend to read these documents, and that goes back to the fact, well, look, this is how much we're lending you, this is how long we're lending it to you for. Please don't go late, because you are going to suffer. And I point at the clause numbers and say, read these, because that's what will happen if you run late. Okay, and they sort of realise that actually we're not one of those nasty people that wants their loan to go late, because then we can really make hay. Yeah, we're one of those people that sets it all out day one. Our term sheets are pretty comprehensive. They will tell everybody exactly what there is. There's nothing nasty hidden on page 19 of the loan agreement, and I talk to a number of borrowers that don't use us, and I always ask them about, well, what hidden fees did you get stung by? And they go into a tirade of abusing that particular lender.
I mean, the hidden fees thing is a disgrace. I mean, when you actually tot everything up, then there's so many dirty tricks out there. Fundamentally it's commercial lending, right? So it's not regulated, and therefore a lender can write anything into the contract. And we urge all borrowers to read thoroughly, and we'll happily cross-check and decipher and interpret for those borrowers any terms that are put in any contract. But the crucial thing is that we know that it's not just us that's part of the service, right? A developer wants funding, and if they can get funding quickly, they are competitively advantaged in that tender process for that site, land, building, whatever, right? So we will get all of our panels of all of our providers working incredibly efficiently, and then the lines of comms that come out of this office and each of those providers is very, very strong. We've got process charts all over the place, mapping out everything that's optimized it, that's communicated it, that has very, very clear expectations, requirements, etc., from each of our professional service providers. So we've streamlined this because, again, it was part of our frustration. You can take days, weeks, or months out of a transaction by doing every single bit in an optimal way, and that massively advantages the SME developer.
It's an interesting point, really, because I think for most of us human beings, when we look at something that comes within our sphere of expertise, that is our entire world. If you're working on something, it becomes your life. And what I mean by that is you make it so important as part of the process. But I certainly have come to the realization that we're a stepping stone, especially the legals. The legals doesn't actually make the client money. It's there to protect them. It's required because of compliance, because of various other things, but it's not the bit that really makes them the money. The bit that makes them the money is the construction phase, and then the onward sale phase, sometimes the planning phase. So really, you want to just get on with the legals, do it as efficiently as possible with as little friction as possible, and then get out of the way. And then so that they can then get on with their main business, which is to developing more homes, construction, and then onward sale, and so on and so forth.
It comes exactly to my point. If you crunch that time that is not site finding and site execution, if you crunch that time down, they grow their businesses quicker. And that was fundamentally that need, that urge. Okay, that's what we wanted. So that's what we went and built. And we are continually getting better and better and better, and quicker at delivering that exceptional service.
Fantastic. Mike and Andrew, it's been a pleasure having you on the show. Is there any sort of final words you'd like to sort of share with the audience?
I think just we fund great projects done by great people, but most importantly, we're here to help SME developers find the right projects for them. So come to us early. It takes literally under 5 minutes to approach us at crowdproperty.com/apply. And that little form enables us to give you a second pair of eyes, second pair of expert eyes that benefits from all of our technology, all of our data analytics, and our expertise in-house to help you back the right projects and maybe move away from the ones that we see problems with. So we're here to help.
Yeah, thank you very much for this morning's get together. It's been good fun. Thank you, and hopefully it's received well by your audience.